We hosted Gabelli's annual Aftermarket Symposium on November 4th and 5th in Las Vegas, where we were able to connect dots across the automotive industry by interviewing the CEOs and CFOs of new and used car dealers, manufacturers, and aftermarket distributors and suppliers. In terms of long-term trends, the conference reinforced that aftermarket tailwinds persist for these companies as the industry grows from $300 billion now to $338 billion by 2022. Trends supporting this growth include an increasing vehicle population, especially as those vehicles in the aftermarket sweet spot of 6 to 11 years old grow by 21% over the next 3 years. Gas prices remain low, now at $2.60 versus over $3.50 in 2014, and the age of the vehicle continues to increase, now above 11 and a half years, which drives replacement rates of this already growing vehicle park. Near-term factors affecting the aftermarket include tariffs, consumer elasticity, e-commerce, and vehicle part complexity and technology. First, tariffs have been a benefit for the aftermarket distributors, driving up prices 2 to 3%, while these large consolidated players have been able to maintain gross profit margin. There is more disparity across suppliers, where the ability to do or maintain margin is highly dependent on product categories sold. Second, increasing technological requirements are driving part complexity and price. 36% of future aftermarket growth is expected to be derived from new products or technology. This will benefit suppliers and repair chains that are able to invest into product development, acquisition, equipment, or technicians to manage this increasing complexity. Further, it will most likely lead to the continued consolidation of both maintenance repair and collision shops. Third, the constant price inflation for both complexity and tariffs may be weighing on the more price-sensitive consumer, as we've seen a weaker do-it-yourself customer and Tier 3 tire buyer. As prices go up, investors need to think about consumer elasticity. In terms of e-commerce, the lack of news or encroachment seems to be a catalyst, especially as all companies invest in omnichannel. And finally, tangential to the aftermarket, we also spoke about used and new car demand. Used vehicle sales have been increasing since 2013 and have helped offset some recent weakness in new unit demand. However, used vehicle sales are looking to plateau over the next few years at around 39 million. Further, off-lease volume seems to be peaking at 4 million per year. This is important to the aftermarket as dealers look to increase parts and service to drive profitability as new vehicle sales soften. Hopefully, I have helped connect some dots for you, and we are looking forward to another great year next year.